All right, good evening. It is currently Sunday, September 15th, 2024, approximately 8:39 p.m. Eastern Standard Time. All right, so got a couple of good insights on some topics for you this evening based off of some research that I did over the weekend. I started more so on Friday. A couple of things that I wanted to dig deeper into. I'll try not to make the video too long as always, but the information is just that good. And I want it to be just that much better understood. So without further ado, we're going to jump right into it. The topics for this evening are going to be order blocks. Then we'll talk about volume, liquidity, and then market movement, aggressive versus passive. So my thought process is to give additional insights about each of these topics that you're probably not going to hear or be able to understand in most places across, YouTube, or wherever you kind of get your information from. So my goal here is to give you some of those and explain some of these additional insights into these topics to help you better navigate and understand how the markets work, the financial markets. Doesn't matter what market you're trading or working with, whether it's the foreign exchange, whether it's stocks, whether it's indices, commodities, doesn't matter, cryptos, all that stuff. These are things that still apply. And I can tell you, case in point, a lot of my research or a lot of what I was doing this weekend was based off of some things that I was seeing with Bitcoin. I was trying out some different theories and things that I had questions about that I wanted to kind of verify with the movement of Bitcoin over the weekend. And of course, the weekend's not a lot of liquidity. There are those that do tend to trade Bitcoin, the coins and stuff over the weekend, which is why it's not a bad time, to try out some things and to either prove or disprove theories, right? That's part of research. So anyway, without further ado, let's jump right into it. So again, the first topic is going to be order blocks. So with that being said, I'm going to jump to screen number 2 here. This is my, okay. All right. So this is of course, my technical analysis screen. This is a USD JPY, 1 hour time frame, right? So the thing I wanted to talk about with order blocks is that order blocks, the way you learn to understand them as beginners, right? Is not really correct as I've come to learn and understand, right? So on this chart, and of course there's the whole topic of support and resistance, supply and demand, right? All kind of the same thing. Yes, no, there's a huge misunderstanding between all of those. So when we look at this, when we look at this chart, right? So you ask yourself, all right, where are the order blocks? And immediately we'll look at and say, okay, the order blocks on this chart, this 1 hour chart, are right here and right here, which resistance, support, right? But yes and no. So here's the deal. All right. So order blocks or true order blocks are not just, so what you see here, so this order block right here, right, is based off of buying and selling activity on a lower time frame, right? That's a lot of orders and stuff being placed at a lower time frame. It's not just the orders and stuff that's in this wick or what have you, even though the order block is kind of drawn based off of this wick or the resistance zone, which is what it really is created based off of this wick right here, right? So what that in essence does, so as you can see, right? So like I said, it's not necessarily the area of this wick. It's basically where, of course, the definition of order blocks is where a large number of orders are placed in a particular area, that's what creates the so-called order block zone, right? Supply, demand, things like that. So support and resistance, though, are areas on the chart that for resistance is an area on the chart that price seems to be rejecting from higher levels, right? From higher activity, right? That's a resistance. So price got here and it seems to not be able to push through. So it pushes down, right? And then goes back, tests this area again. Like this is what creates a resistance zone, so to speak, or what have you. So what I really, same thing for support, right? Same thing goes. But what I really want you to understand is the most important place or area on this chart, right? That price is going to have the best reaction to is this zone right here. This is why this right here on this 1 hour chart, this is the order block. This is the order block on this chart. So when you're looking, right, because most people are looking at order blocks as the areas where price is going to react, right? I'm looking to catch a reversal, right? A rejection or something like that, or a breakout, things of that sort, right? It's going to be the area on your chart with the most volume, right? This is the real true order block because this is where majority of the actual orders have been transacted within this time frame, this 1 hour time frame, right? This chart right here, this area right here, this zone is the area at which majority of the volume and orders have been transacted. So this zone right here is way more important than this zone right here on this particular chart, right? Because this one, right, this zone right here was created based off of the volume. And I'm gonna show you this. I'm gonna show you this because I need you to understand the significance of this. So this zone right here is created off of, and this isn't all of the volume because it encompasses a little bit more of an area than this, but let's just use this one for example. 85.153 million, right? 85.153 million. That's what this zone is based off of. That's the volume that you're looking at right there, right? Now, like I was saying, this area right here, this so-called resistance zone or area, right? You can see obviously even on this chart, it's based off a lower volume, right? Well, when we look at it, look at the high volume area on the lower time frame, it's significantly lower volume, right? So again, when you're looking at this, even just looking at this chart right here, you can obviously see that there's more volume sitting right here than sitting right here. So there's more orders sitting right here than they are sitting right here. So price is going to have its best and biggest reaction from here and not here. So you need to take that same knowledge and understanding down to lower time frames. That's how you begin to start to understand why the market is moving the way that it's moving, right? So if I look at why the market, right, reversed right here, all you have to do is go to a lower time frame. If we go to and we can do it right here. Let's do it. Let me save this real quick. I'm going to show you what this looks like. So remember, this is where price reversed, right? This is hours. These are hours that the price got up to here and decided to, it kept bouncing off, right? So then, price is doing this thing right here. And I'm going to get into why price is doing that here in a second, but let's look at my lower time frame, which is the 5-minute. I'm going to show you what that looks like on the lower time frame because you have to understand this in order to really begin to understand the market and how it moves and why it moves, right? So that zone that I was showing you on the 1 hour that price on Friday started rejecting, this is it right here, right? So what is this? This is the area on this 5-minute chart, right? Where there was the majority of the volume, right? So majority of the volume was concentrated right here on this 5-minute chart, right? And again, that's what I was showing you on the 1 hour chart, that price basically was ranging, right, in between the 1 hour order block, as we can see it right here, right, and the high volume area, right, for hours, for majority of the day, that's what price did. So this 5 minute chart, what it does is it's really good at capturing the volume for the day, like where the high volume areas are for today's trading, right? So remember, on each time frame, it has its high volume area. So the higher up you go, that's volume that's been there for a while, historical volume areas, right? Or what have you. The 5 minute tends to capture the most current volume, right? Or what have you. So when you're looking at the 5 minute, again, I can see here for this particular range, and because it pertains for the most part to this range. Let me do something real quick because I want to tighten this up. It pertains to this range, not necessarily capturing just the volume for the day. This will change based off of the volume that comes into today's trading session. And as you can see, some of these other volume nodes are starting to pick up here. So you can look for this high volume node to probably come down here somewhere, right? And you'll start to see that price will be reacting from that particular area. So when you're looking, right, and you're doing your trade, so I say, okay, if I'm going to put a buy trade in, right, put a buy trade in right here, right? We have a fair value gap and we have this high volume node. So these are the areas, right, that price has the best chances of reacting from this fair value gap and this high volume node area or zone right here, right? So, that's kind of how you want to base your potential, the potential for the market to react, from areas like that. High volume, fair value gap, high volume, right? So that's the discussion that I wanted to share and the insight I wanted to share when it comes to order blocks. And as you can see, order blocks and volume. Again, on this particular chart, the most important spot on this chart is this area right here, right? More so this area because this is the 1 hour the 1 hour support zone, right? We know that obviously there's a lot of volume sitting right here from the higher time frame, but for purposes of illustration, right? This high volume area again is indicative of where price was ranging, what created a resistance point area zone on Friday's trading, and price did not go above this area for the rest of the day. All right. So again, additional insight that I wanted to give to you all, to kind of help you to understand order blocks, supply and demand, support and resistance, and then volume. Understanding, again, more so the part that volume plays in all of this. Okay, now this leads me into the next topic, which is volume/liquidity. So it's the same thing, right? Liquidity is volume, volume is liquidity. It's all about how it's used, when it's used, and where it's used, right? So right now, as you can see, as we're talking, right, we see that we know that Sundays, the beginning of the new trading week, starts on Sunday evenings at 5 p.m., right? So, but at that time, there's not a lot of liquidity that's going on, right? Not right now, right? So what's happening is that, price or the market is looking to find its footing, right? Where's the liquidity? Do we need to create liquidity? Do we have enough liquidity to move the market where we want to move it, right? All of that stuff plays a factor, and you start to see, right? We're having a shift in our profile right here, as the market continues to move down. Like I said, look for this high volume area to end up coming down here somewhere, because as we do our analysis, which I already did, top-down analysis, we're looking like we're going to continue to be bullish, for the next day or so. Looking on the daily, we're looking really, really bullish. So here's what I want you to understand about volume and liquidity, right? Volume and liquidity, right? So the thing, and especially using this profile right here, this money flow profile, it's all about the volume, right? So this thing here is absolutely awesome for so many different reasons, right? But what happens is, and to understand like market movement, I'm gonna blow this up a little bit because this is really important. So what happens is, so when we're in this 1 hour support zone, right? So what happens with price is this. when you're looking at areas on the chart that have the potential for reversals and things, here's the deal. So it's low volume areas, right? So what happened was the market came all the way down here, right? We see that that was very low volume. So the market reversed. So what causes, so when you're looking for the potential for reversals, right? It's going to be one of three things. It's going to be areas of low volume. That's what you want to see. So if I have an order block that I'm looking to trade, or a support zone, a zone that I'm looking to trade from, I'm looking for one of three things. I'm looking for low volume, right? That would indicate potential, the potential for a reversal. High volume, right? That means there's a lot of orders sitting right here. So that gives me potential for a reversal, for price to reject this level, or fair value gaps, right? Inefficiencies, okay? Again, these are three reasons, and I'm not saying these are the only three. These are just three that I'm talking about today. These are the three reasons and the three things to look for if you're looking for possible and potential for reversals, right? So areas where you see blue, right? So obviously low volume is indicated by red, right? We're getting a little more volume when we start turning a little bit darker. See this like little purple a little bit. So a little more volume is starting to come in at that area right there. Now blue though, blue is medium volume. Blue are the areas on the chart, the price areas on the chart where price can move up and down, pretty easily or what have you. But again though, when you get to the low volume and the high volume and fair value gaps, these are the areas on the chart where price, may have the best chance of reversing and rejecting, right? Because of the volume that's sitting there. And so that's the thought process in the use of liquidity, right? So what happened was, as you can see right here, price came down to fill the void in this fair value gap right here. We see it filled it, right? Came down with this candle right here, filled it, pushed back up to the high volume area. Look, from liquidity to liquidity. See what I was saying? It pushed back up to the high volume area, right? And so then, of course, it pushed away from here because again, it moves from an area of low volume to an area of high volume. Again, being able to move in these blue areas a little smoother, right? It's not until we get into the yellow areas, right, where we start to reject and things like that. Again, low volume, high volume, right? Fair value gaps. These are the potentials for price reversal. So when you're trading and you're looking for your trade setups and stuff, so if I'm looking inside of an order, a zone, a trading zone, let's just call it trading zone. Again, you're looking for those things. Is this zone a zone of low volume? And also, do I have liquidity, sitting here that the market may want to come and grab before moving, to the upside? Again, the direction of the market is driven by the higher time frame. So you look at the higher time frame to see if we have more potential for a downside movement or upside movement. Again, looking at the liquidity. So again, when there's low liquidity, the market is going to start to have a reaction. It does not mean that, again, we're not going to have a scenario where the volume is going to move down here because we're starting to place a lot of orders in this zone right here, in this area, right? Because we want to continue to push the market down. So that's when you start to go to the higher time frame. Again, understand your higher time frame to understand where the market has the most potential for movement. But again, it can't do that unless it has the volume and the liquidity in order to do so, right? So until the market has enough liquidity to break through to the downside on this right here, it's going to continue to range. That's what ranging markets is all about. Now, again, what I'm looking at and what I'm thinking is about to happen is this range is going to get a little bit smaller. That's why this volume node right here, this volume zone, is probably going to come down here, and you're going to have a little bit of a tighter range until price has enough liquidity to push and break through this order block here, or it could be setting up for a move to the upside. Again, that's guided by the higher time frame setups and stuff, and that's what you want to kind of look at to kind of start looking at your potential trade setups and stuff. Where does the market have the potential to move, right? So as you see, like when we look at liquidity and order blocks, supply and resistance zones and stuff, again, it's all about what the liquidity looks like within that zone, within this area. So we see here we have a bit of a mixture. So at the top side here, we have we're starting to grow some liquidity. Again, like I said, the zone is going to get a little bit shorter. So if that starts to happen, start to look for price to move away from this zone one way or another, because we're starting to get a lot more liquidity, either up or coming down. So start as more volume starts to come in. Again, so at the bottom here, we see that we have quite a bit. So if price keeps pushing down here, again, look for volume to build up. Look for more blue volume, so to speak, to indicate that price is going to continue to move down. And if you look at the higher time frame, I'm pretty sure this area below this this zone right here starts to turn blue to indicate that we're going to probably get continued push to the downside as orders come in to probably lock this side up for a resistance area or what have you. But we'll see what that looks like. And again, and this is how this is how trading works. This is how price works, because as we start to build up orders in this zone right here, right? And let's say price does push down, when price comes back to test this zone, we've built up enough liquidity to now continue to push price down. That's how this works. That's why you get consolidation, because now, again, we've all been taught, right, that consolidation is when we're resetting, right? We got to reorganize for the big push, one way or another, right? And so that's the potential. So what happens is, let's say we break through, we get that breakout, right? Price comes back to test the zone. Now you have a high volume zone, right? Right in this area that price starts to reject from. See, right now that zone is right there, but that if it breaks out, right, that zone could potentially be right here, right? And now we got our zone in our area for our rejections, to the downside, which gives us, again, even more validation of where we want to look to put out trade setups, from a day-to-day basis as we look for these trade setups. Again, I hope you're starting to understand and put all of this together for understanding how the market moves and why. So another thing that I'm going to point out to you, as I'm seeing it here on this chart, right? When you look at the Red K Everex oscillator momentum, because again, we utilize this for our momentum. Momentum, if you look at my previous video, plays a very big part in understanding market direction, which we're going to talk about market movement in next, right? Aggressive and passive, you understand that. But what I wanted to point out is, so this blue line right here is the zero line. So most of the time when price is above the zero line, especially if we're pointing up, right? If we're pointing up kind of like this, right? This delineates increased strength to the upside, right? Once it crosses this zero line right here, increased momentum to the upside. And you see where we started to get even more momentum to the upside. Now, as we go below this zero line, right? This is decreased momentum, right? Or increase momentum to the downside, however you want to put it. So right now we see that we're below the zero line on the 1 hour, right? So we're having a situation here where there's decreased momentum to the downside or increased momentum to the downside, however you want to put it. So price could come and bounce off, or again, what it's doing right now, we see that the white line is slightly above. Well, they're neck and neck right now, so it could go either way, right? So depending on where that momentum goes, right, will determine, kind of how what price goes. So again, if we go above this zero line, then that means increased momentum to the upside. If we stay below, that means increased momentum to the downside. So I just wanted to point that out while I have it here in the chart. All right, so that goes into market movement, aggressive and passive. What do I mean by that? All right, so what we've been taught. So when you start to learn trading, and you at the beginning stages of trading and everything, you start to hear terms, and you start to hear people talk about why the market moves, right? So it's you've probably heard before aggressive buying and aggressive selling, right? It doesn't mean what you may think it means. And then again, it may, right? So when we think about aggressive buying and aggressive selling, what that means is that when we talk about market orders and entry orders, so limit orders, versus market orders. So market orders where I'm willing to buy. So these are these are your passive, these are your passive orders. So passive orders are, no. So your aggressive orders are going to be your market orders. That's when I'm willing to buy or sell at any price. That means as the market is moving, I'm putting in orders. I'm buying or selling, right? Aggressive. That's aggressive. So aggressive movement, right, isn't necessarily indicative of a lot of volume. What it's indicative of, so aggression and price movement, so like aggressive buying. What aggressive buying truly is the willingness to buy at any price point. That means market orders right now. I'm willing to buy right here. I have no predetermined price that I want to buy or sell. I want it right here, right now. It doesn't matter what the price is, right? That's aggressive. That's what moves the market, not necessarily volume. Two different things. Remember, volume is where I'm placing these orders. You see what I'm saying? That's why you get, see this inefficiency right here? That's volume because I got volume sitting here. So I'm placing my orders here. And then what I do is, right, then I want the aggressiveness, which is not necessarily volume, but I'm placing little orders, being aggressive and pushing the market up with little volume. That's aggressive. Willing to buy or placing orders at any price level. That's aggressiveness. So when they talk about, the buyer stepped in to push the market up, that's showing aggression. Meaning, right, I'm pushing the market up. It doesn't take a lot of volume necessarily, a lot of volume, but it takes the willingness to buy, place orders at every single price level up the chain, up the chain, up the chain. I can put one order in, price gonna move up. I can put another order in at the next price level, price is gonna move up. I put one order in at the next price level, price is gonna move up. That's what aggression is. That's what aggressive buying or selling is. It's the movement or the placing of orders, in any one direction, right, to move the market. That's what moves the market. Aggressive buying moves the market up. That means placing buy orders at different places up the chart, up price as price is going up. Again, not necessarily indicative of volume because again, I have my volume right here. So as a market maker, as an institution, I place my orders down here. Now I need the market to push up to make my orders more valuable. So us as retail traders, this is information we need to understand in order to understand where price is going, when price could be potentially going that way and things like that. So again, aggressive selling happens the other way, right? Aggressive selling is when I'm willing to sell, put an order in for a sale at lower price levels. Doesn't matter where it is. I want to get in the market. I want to get in the market. That's what moves the market up and down the price line, is that aggressiveness and willingness to buy or sell or transact at, different levels, at any levels or along that price line, right? That's again, aggressive buying happens, and aggressive selling happens when we're willing to place orders at any price level and it doesn't matter, right? Now, passive order taking or placing of orders is when you have your entry orders, like those are your limit orders, right? Again, that's your passivity. So passive market participants are the ones that's placing limit orders. They're saying, look, I'm limiting my risk. I want to get in at this price point right here, nowhere else. So once price reaches here, I'm triggered into the market, right? It takes away the impulse. It takes away the looking at what the market is doing right now and all of that stuff. I have a predetermined area where I'm looking at predetermined price rather, where I'm looking to get active in the market. That's the passive order making, right? Passive buying. I'm placing entry order, limit order at this particular level to be triggered into the market when price gets there. That's your passivity. Again, that's not necessarily what moves the market. But again, and when you talk about the large orders, the actual large quantity orders are placed typically at the beginning of moves, right? Those orders that you can't see, especially in the Forex market, where it could be 1,000 lots. right? It could be 1,000 lots, 1,000, 100,000 contracts, or 200,000 contracts, whatever it is. I'm placing them right here, right? Then there's smaller contracts that's placed along the rest of this line, that aggressiveness that pushes the market up. And then that makes that 100,000 contracts that I just bought down here at this level, that makes it even more valuable now, because I put my order in at a better price level, at a great price level, and now it has increased in value, right? And it's the same thing going down. If you're doing selling, if you're putting sell orders, I'm putting them right here, because eventually aggressiveness is going to come into the market to continue to push the market down. See, that's why the majority of the orders go right here, right? Majority of those orders go right here. This is the large volume. The volume is right here, right? This isn't what move. That's not what's moving the market, because you see, the market is in a range. See, when the market is in the range, that's when we place in that volume. That's all. Think about it. The volume is here. If the volume was all along this line, then that's, again, that they wouldn't make any money there, right? All the volume, they're placing their volume right here, so that when the aggressiveness comes into the market, boom, it makes what the orders, the large orders that I place here, makes them more valuable as price pushes down. That's how that works. That's why you have volume at one area and then price movement, right, away from this high volume area. Again, it's not necessarily volume that pushes the market, it's that aggressiveness, right? Because it's the market is being aggressive because the volume is right here. That is why we're going to tie it all the way back now. That's why order blocks, or areas, again, the true order blocks, right, are so valuable. And that's why price tends to move away from these areas with aggression, because this is where I make my money, from these areas. So that's why the high volume areas are most important, because this is where most of those big orders are sitting, right? So when price comes back here, I need to protect. That's what it really means, to protect, right, my orders, to protect what's here in these order blocks, right? And again, most of that is driven by popularity of the currency, and we'll talk about that more in another video. All right, look, I think I've said a lot. I hope it makes sense. Again, dollars and cents, and you can take this information and look at it, apply it, and be successful in your trading. At the end of the day, that's what it's all about. That's what I'm all about. My success, your success, is what it's all about at the end of the day. Again, I'm gonna always give it to you straight. I'm gonna give it to you the way I get it, and that's straight up, no chaser, no chaser, because I believe this is information that people need to know and understand in order to be the best traders that we can be, right? As always, happy trading to you. Good luck. Get out here and let's get to this bag.